Yeah, thanks very much, everybody. So I'm here to give a little bit of insight. I'll take less than 2 minutes just to give you a brief overview on Haywood Securities, and then get into the approach that we've taken in taking a look at analyzing and researching the blockchain and cryptocurrency sector. So to give you a little bit of background about myself, just a little bit further to what was just said. I've been a research analyst for a little over 10 years now. And what I'm going to try to draw upon is what most people probably think I'm a little bit crazy to try to draw some sort of correlation between the cannabis industry and blockchain and cryptocurrency, but I think you'll get my point once I get through some of the slides here going forward. So just a little bit brief about Haywood Securities. I don't think everything made it up on the screen, but Haywood Securities is an independently owned investment bank headquartered in Vancouver, Canada, with offices in Toronto and Calgary. On the retail side, we've got about $6.5 billion of assets under management, a little over 275 employees spread across those 3 locations. Some of those coming up a little bit better now. Overall, I'd say that the company's been around since the early 80s, and we're a full-service investment bank in Canada. So some of the different things that we have in our organization, obviously investment banking, equity research, which is where I fall under, sales and trading, and a quite extensive retail network. So just a little bit of an overview of some of the transactions that Haywood's been involved in this particular space. We've just got some of the nameplates up there. I'm not going to go each one, but just obviously our team wanted to make sure that everybody here knows that we've been active in this space, particularly over the past 12 months, and continue to be going forward, obviously, as one of the sponsors here at the conference. So this is really where I start to get involved here is how do I take a look at this overall industry? And what I view this as really as an emerging sector. And so that's where my correlation draws to the cannabis sector. It pretty much ends at that. But basically what we're looking at is a industry that doesn't really have any prior history to it. It's a fairly new industry, and that was the same thing in Canada. As many of you may know, in Canada, the cannabis sector really got started in 2014 with the first publicly traded company, at that time focused on the medical side. Since then, we've obviously had a new government put in place, and the whole recreational marijuana movement is going forward with the expectation of legalization sometime in the middle of this year. But back in 2014, when I first started taking a look at it, the problem was that investors, which is what Haywood's responsibility is, you got to take a look at it. Our role here is to try to educate the buy side, educate the retail network of investors as to what they should be looking at, how they should be trying to understand potential investment opportunities. So when you have a brand new sector that nobody knows anything about, our goal at first at least is to try to do some sort of education and basically make people aware of what the potential opportunities are. And so that's what we started taking a look at, and that's why I say there's actually that's the only similarity between the 2 industries, but it's the approach that we tried to take as far as starting the whole conversation of what the investment opportunities might be. Because when you take a look at it, most investors they're experienced and they understand traditional industries, whether it be mining or oil and gas, and they can use various different valuation metrics to try to figure out whether they think it's a compelling transaction or a compelling investment. With an emerging market sector, there's no precedent transactions, there's no history, there's companies that are being formed from the grounds up by entrepreneurs that you can't say, okay, well, this is what happened 5 years ago, and we can do a relative comparison to that. You basically have to try to do relative comparisons to companies that are starting up as you're taking a look at them, going through everything. So, I'm going to get into that over the course of the next couple of slides, but that's where we sort of take a look at as far as just saying this is an emerging industry. Nobody really knows anything about it. I know lots of people in this room, are more, well-versed than myself and many other people in the overall blockchain or cryptocurrency space. But when you take a look at the average typical investor, they didn't know much about it, really over the course of the past year when this really became a little bit more broadly accepted. So we put out our first research report on the space back in October of 2017. And my first bullet point there is a little bit flippant, but it really is. You'd have some conversations with people, and you'd mention the word Bitcoin, and they'd think that that's the same thing as blockchain, just because they both started with the letter of B, right? They didn't understand that there was a difference between blockchain, which is basically a protocol, if you will, versus Bitcoin, which is a cryptocurrency. And I had lots of people's eyes roll when I tried to educate them as far as how many cryptocurrencies were actually out there. Many of them, at least in the circle that I speak to with respect to either institutional investors or retail brokers, the fact that they only heard of a few of the cryptocurrencies and not understanding that there's a much broader scope out there. So we put out that first report really for the focus of trying to educate, and it was all about the potential use cases for blockchain, that there's not just cryptocurrency side of it. Cryptocurrency was really something that became a lot more, or at least people became more broadly aware of in 2017 from my perspective. And so that was really the focus, and that's been the focus to date. But we also, with that report, tried to educate people saying, you know what, there's other applications for blockchain technologies. It's a protocol that could be pretty transformational with some of the different use cases out there. So that was really our first goal and objective, was just start the conversation and help people understand where the different investment opportunities lie. As at Haywood, as in some of the other investment banks, our goal is to really start that conversation, make people aware of what the investment opportunities may be, because we're the ones that actually ultimately help people allocate their capital and figure out what they want to invest in. So since that first report, we had a number of obviously conversations, a lot of interest that came on the back of that. We've published 2 more reports since then. Our most recent one we put out towards the end of January, because in Canada, if you take a look at the public capital markets and some of the companies that are trading out there, a lot of them are focused on cryptocurrency and cryptocurrency mining. And so people are taking a look at these companies, they're saying, I have no idea, what's the economic model? How do they generate revenue? What are their costs? How do I look at this? How do I assess this investment opportunity? So that most recent report, we basically focused on that. And while I recognize that there's lots of different components to the economic model of cryptocurrency mining, we obviously had to pick one, at least at a starting point, and then start the discussion there. So we did focus on obviously a proof of work mining operation, and we use Bitcoin. So we recognize that there's obviously differences when you take a look at the different cryptocurrencies out there. So this slide, what we've tried to do in that report is try to highlight where the revenue and costs are, predominantly just from the activity of Bitcoin mining. And so we would highlight the fact that there's a couple of key variables that really you need to focus on to understand different companies and what their opportunity may be. So naturally, the hash rate, or the computational power, to try to simplify some of the terms here, is one of the key factors in being able to generate revenue. The block reward in Bitcoin, we all know what that is right now. And then obviously the other component in there is the difficulty, or the network hash rate. And that varies obviously from time to time, but generally speaking, it's increasing year over year or month over month. We take a look at it actually increasing sort of every 14 days and use some percentages around that. I'm not going to get into the specifics for here, but just sort of trying to outlay and overview the overall things to consider. On the cost side of thing, obviously the biggest thing is the electricity, or the power consumption, and what you're paying for a power consumption. So that's why you'll have a lot of companies out there trying to tout how much they're paying per kilowatt hour, how many kilowatts they use, or how many megawatts of power they have. Because the megawatts of power, you can say, oh, well, that's going to drive how much hash rate you can have as far as how many machines you have plugged in. But then on the cost side, it's how much you're actually paying to actually run those machines. So when we take a look at the two sides of that equation, we get down to what we refer to as the mining gross profit, or the mining margin. And so that strips away anything specific to the company, really, with respect to how they go about executing on an operational basis. And I'll get to that in a couple of slides. Obviously, we've excluded in this sort of simplistic model some other things that you need to consider with respect to mining pool fees or transaction fees, cost and replacement of hardware, and that's why we try to focus and say, if you're looking at one company to the next and they're both, say, Bitcoin miners, this is what you can get to, at least as far as a mining gross profit. Following on that, we tried to do, I don't know if you guys can shrink that screen again, we keep on sort of cutting off the bottom part of it. But we put out in that research report at the end of January just some scenarios for people to consider, and we just kept various different things static. We just picked a Bitcoin price. Obviously, it's volatile, but you need to pick that as far as just try to do a scenario illustration. But we basically did the illustration for the first 4 scenarios is just what you can actually see as the increase in the mining gross profit as you add different machines, or sorry, you add more machines, and what that actually means on a daily basis of what your potential revenue opportunity is. The 5th scenario, which I'm not sure that actually you can just sort of see at the bottom of the screen there, is we illustrate what the difference is when you actually increase your cost per kilowatt hour. So, the one side we're trying to highlight how you increase your revenues by adding more machines. The other side is if you don't operate in a low-cost jurisdiction, you have higher mining costs, obviously your margin goes down. So at the bottom of the screen here that you can't quite see, you'd have margins in the high 80% range in the first 4 scenarios, and dropping to the high 70% range in the 5th scenario, where you have a higher electricity cost. So, as I mentioned, that's sort of a bit of a simplistic approach to it. There's obviously a lot of other things to consider when you're taking a look at evaluating an investment opportunity. Those other things can, really come back down to the management team to some extent, as far as how cost-effective they are at operating their business with just regular G&A expenses, overhead expenses, but there's also other things that actually factor into it as well. When you get to below mining gross margin, you got to look at what's the cost of facility, what are the administrative costs as far as having staff that are operating that facility and maintaining the machines in the facility, employment costs for management and other staff. But there's also other considerations to consider as well with respect to whether they're just doing straight self-mining, or what I call hash rate sales versus self-mining. You obviously have to look at the regulatory environment. I think as a couple other speakers have touched on today. And then as well as other auxiliary services that are out there with respect to either exchanges and digital wallets and et cetera. So when you take a look at it overall, you get to a mining gross margin, but like in any other industry, this isn't any different in that it still comes down to the management team, how they're operating the business and how they're effectively managing the business, figuring out what their growth strategy is, how good are they going to be as far as replacing the machines as new technology comes out so they remain competitive and so forth. So this, I'll touch back on the cannabis sector here for a second as far as valuation considerations. So back in 2014, when we had our first company in Canada that was operating in the cannabis industry, people were like, well, how do I value this thing? This is, there's no precedent transaction, there's no history. What is a particular good valuation? So people struggle, and you come out with different various sort of ways to look at it. And so what they did in the cannabis industry, people started out saying, okay, well, I'm going to look at enterprise value to license capacity. And for those of you who aren't familiar with that, that was really just a way to try to normalize looking at different companies and saying, okay, well, if you have a license capacity for 10,000 kilograms per year, then I can assume you can do X amount in revenues. And so I can get an idea as far as how you're valued compared to one of your peers. And that changed overall after the Trudeau government was elected and the recreational came in. Obviously, it was a race to scale. And so that evolved to an enterprise value to funded capacity. And really all that was is that how much capital did you have on your balance sheet can you fund to your expansion? So we get a little bit better idea of whether there's further capital to be raised. So I use that only as an analogy to what I've heard, obviously in the first little bit within the cryptocurrency mining space, in that at first I heard is like, oh, enterprise value to megawatt. I was like, all right, well, yeah, I get that. In that fact is the number of megawatts you have under contract or however, that will determine how many machines you might be able to plug in, or that will determine what your potential opportunity is. But depending on whether you put in a 3-year-old machine or a brand new machine, that's going to be, that will determine how much your hash rate is. And that's what ultimately determines what your revenue opportunity is. So you see that sort of migrate to, enterprise value to hash rate. And again, that doesn't take into the cost side of the equation, but at least it gives you an ability to try to compare one publicly traded company to another publicly traded company and see on a relative basis. Again, you're not comparing it to other industries, you're not comparing it to other tech companies, because they all have different either margin profiles or economic opportunities. I think that obviously this is all, ultimately going to grow into more traditional metrics, but I think it's still early stages to take a look at some of the publicly traded companies out there and say, okay, well, I'm going to go now with an EV to EBITDA. Because right now, I think people are still struggling to run through the entire model, come out with a reasonable EBITDA EBITDA number, when many of these companies just started trading in the past few months. They don't have historical track record. You're not sure what their overhead expenses are. So, but I think as we move forward, we're going to see those EV to EBITDA, or potentially, with respect to cryptocurrency mining, return on invested capital. Because I think, as many of you in the room know, you have to keep on investing in the facility, keep on investing in your equipment, and people are going to be looking at what kind of return you can generate off of that. So, I think those are some of the ways that Haywood has tried to look at it. And, again, our role was really to educate our buy-side clients, educate our retail network as far as here are the different things you should consider, here are the different opportunities that are potentially out there. I'm down here at the conference not so much to do this presentation to you guys, but to learn more and more about the industry, to further and continue to refine that and be able to share that with the potential investors out there that may want to invest in any of the companies that you see down here presenting. So I think that's, wrap it up there. And thank you very much for your time.